Here to discuss is Bradley Tusk, Tusk Ventures founder and CEO. It's great to see you, Bradley.
Hey, Kelly.
How are you thinking about this?
I think that in a lot of ways, the excitement that the hyperscalers had kind of got away from them a little bit, and it's starting to face reality. So there's two big things. So let's take the Oracle announcement today. I understand that if they believe that they have customers for the cloud services and they need more, CapEx to be able to then build it and sell it, that makes sense as a business. But it still fundamentally depends on the model of we need generative AI powered by incredibly powerful, incredibly expensive, incredibly energy intensive chips made by companies like NVIDIA or ADM, and that to be put in data centers that will use incredible amounts of energy. And all of this is both necessary and will happen. And I think what we're starting to see is neither of those are good assumptions. So on the economic side, yes, the potential for AI is great, but do you know what OpenAI and Claude are going to make this year in terms of revenue? Combined, $30 billion is the projections, 35 if you're being generous. That's minuscule. Now, I understand that at the beginning of any major economic transformation in an industry, the numbers are very small at the beginning and very big later on. As a venture capitalist, that's literally what we invest in. However, given the amount of debt being taken on here, you have to really believe that demand for those services are going to be there. And I will tell you, so this morning, I was running kind of a math question, modeling out our fund and some different questions that I want to know about ways to take equity from our portfolio companies. And I gave the same question, which had about 15 different variables, to 5 different AI platforms: OpenAI, Grok, Claude, Gemini, Perplexity. And the product I got back was really subpar. So yes, it was faster than if an analyst did all of it for me on paper. But, Claude doubled the amount of equity that I told them we would have. So it looked great on paper, but it wasn't actually right in terms of the amount of money we would make. OpenAI literally forgot to account for equity. So I'm not sure they have a product really worth selling to justify all this debt and all this investment. Right. Maybe that's different in B2B. But then the other thing is politically, we're starting to see all over the country from both parties huge revolts from elected officials saying, we're not going to give you the permitting and zoning that you need to build your data centers because your plan for doing so just makes all of the other ratepayers for the local utility, i.e. voters, have to pay 30, 40, 50% more. Whether it's a normal human being or a politician, no one's looking to pay a lot more money or sacrifice their political career so that Sam Altman can become a trillionaire.
I take your concern in using it myself. So it's funny, the other day I was saying to it, who would have had the biggest market cap if you were to kind of add back in share buybacks and dividends and all of that? And its answer was basically right, which is Apple, but it had NVIDIA's market cap off by $1 trillion. And this was Gemini, right, which I consider to be kind of the best of the best. So as users, we all are frustrated because we want them, you see, if they were perfectly reliable, you would literally never look back. They're still so good, Bradley, that I'm still I watch myself and I'm like, I know I have to double check this, but this is still so superior to working with sort of old Google, you know what I mean?
Right, but there is a distinction between a business that can produce $30 billion a year in revenue, even $300 billion a year in revenue, or an industry, and then an industry like this, which in order for just the current spending and borrowing and everything else to work, has to start generating, in the 2030s, trillions of dollars a year in revenue. And my concern, and this has been the case from the beginning, is a lot of the CapEx and borrowing and infrastructure investments that are announced are effectively short-term valuation plays disguised as long-term thinking. Companies know that if they say, oh, we're going to invest $100 billion in this new advanced technology, investors like it because it sounds like they're thinking about the future and they're thinking long-term, and they get rewarded for that. But I think that a lot of the investments were driven by the desire to pump up current share prices or current valuations of the private companies as opposed to what they actually need. And they certainly didn't take into account that I don't think most of these data centers in the vision are going to be allowed to proceed anyway.